Good afternoon, this is Rich Nelson with Allendale, covering the wrap-up commodity comments. Today's Wednesday. This is September 15th of 2010. Before we're going to get into what's going on in the markets, just want to go on a little soapbox here, make some points regarding the current trades, ideas on yields and things like that here. Currently, we are hearing consistent yield reports, not just from our customers, but also across the general trade spectrum. The yields are running about 10 bushels lower than last year. That certainly is true. Some people say maybe 15 or so as far as a nationwide type of yield number. Certainly Nebraska and Minnesota are running much better than last year, but other than that, looks like most areas are saying we are running a little bit lower here. One thing we do have to point out is that does not translate into a 10 bushel drop on USDA's nationwide yield number in the coming months, and here's why. Main reason why is because these off-the-combine reports do not include things like moisture or more importantly, test weight adjustments. Keep in mind that last year we had test weight numbers running anywhere 49 to 53 pounds. This year we are seeing something 57 to 59 pound test weights. So though we may see yields down as much as 10 bushels from last year, keep in mind those are off the combine numbers. Numbers, once they're adjusted for the much better test weight, only show a more moderate decline. That's why we are not in the camps which are saying this yields which are 162.5 according to USDA. There are groups saying that will drop down to mid-150s or so in the coming months. So we got to keep in mind, advertised yields are lower. No one's going to argue with that. We simply point out the fact that test weights, after being adjusted for test weights, you're only going to see a moderate drop in yields from here. So keep in mind as far as that goes, we do have some discrepancies in the market between what the news wires are advertising, what traders believe, and what's actually going on out in the industry right now. As far as today's action, kind of a mixed trade, not a whole lot going on regarding volume. A lighter trade day here. People are more or less sitting and waiting right now. In terms of action on the corn, up a quarter cent. Today's high of 498.5 came close to that magic $5 mark that a lot of people are talking about, but was not able to close above it here. I won't point out this is still the highest close of this current uptrend, though. Beans up 7 cents. Not a whole lot of news report on the bean issue right now. Wheat down about 9.25 cents. So as far as the corn and wheat, we do have a little bit of news there. COFCO, the state-owned grain company in China, did get a chance to speak at a Chinese corn conference. They mentioned two interesting things here. Number one, though no 2010 or 11 based corn production estimates were released, or were discussed in terms of actual numbers, they did point out that this is going to be a bumper crop this year. They didn't say record, but simply a bumper, which means obviously higher than last year. Second issue is that imports for 2010 only seen imports for 2010/11 were only seen at 1.5 million tons. They've already bought 1.3 from us, so this implies only 200,000 bushels or 200,000 tons more remaining for the entire marketing year. So something which might bring people's expectations down a little bit here. And keep in mind the private trade before have been talking of a 1 all the way up to 5 million metric ton import year for China next year. As far as the wheat side news out there, we will point out this morning we did have a slightly better tone due to Ukraine's ag ministry. They did lower their estimate of the total grain production number. It was 40 to 41 metric tons. That's in million metric tons. They dropped that down to about 38 million metric tons. But the reason why the wheat closed lower today, Egypt did buy 295,000 tons of wheat. However, the trade was disappointed because the U.S. only received 55,000 tons of that order. We see Canada picked up 60, and France received the bulk, picking up 180,000 tons of that sale. So a little disappointment here as far as that wheat sale. Over in the livestock, kind of a slower trade as well. We do see the cattle down about 7 cents for that October contract. We're also waiting for cash cattle to go on here. Right now, bids 96, offers of 99. We do have some people suggesting that feedlots have raised those offers up to hundreds or 101. But at this point, it's hard to see packers reaching out and actually going after these cattle this week at least. Keep in mind, wholesale beef continues to plow lower. In fact, today down 10 for choice and 81 for select on the midday beef report here. So at this point, while we do have expectations or hopes from the feedlots of higher cash, it's hard to see packers pay up when they don't have that back end moving up accordingly here. Over on the cattle and feed side, we do see that report will be out this on Friday here. Numbers on the outside appear good. Placements, the average guess according to Dow Jones is 98.4. That's very close to our 96.7 number. We do have average guess for marketing's 106.2. That's very close to our number of 106.1. Main thing going on right now is placements down because we did see margins kind of tighten up a little bit during the month of August. We do see marketing's increase dramatically. Keep in mind, last month, we had one extra day for marketing. One extra weekday and one less Saturday. So that jumped these numbers on the marketing side by about 3% or so. Also, the other thing to point out here regarding these marketing numbers is the fact that we have higher slaughter numbers to begin with because we're working right now off all those spring and early summer, those big placements. So marketings are large, but they're going to remain large through December because we simply got the extra cattle to work with right now. Over on the hog side, up 55 cents for the October contract. Certainly a much better day than expected. This is a surprising rally here for us. We now have the highest close for the October contract since August 2nd. I have here 79.60. So it's actually the second highest close for the October contract so far. The main reason here is because slaughter continues to push a little lower than expected. It looks like this week's going to wrap up maybe 6, maybe 7% lower than last year at this time. Keep in mind, according to the June Hogs and Pigs report, we're only supposed to run maybe about 5% lower at this time, maybe 4 to 5. So the fact they're running 6 to 7% lower slaughter is a little bit surprising, and the trade is trying to adjust. Keep in mind, we do have a new Hogs and Pigs report coming out. That's going to be next Friday on the 24th. So we'll certainly look forward to seeing what that has to say for us here right now. So overall, mixed day here for all the grains as well as livestock. Key issues we're looking at right now, getting in more harvest reports, getting in also with those test weight reports, and also those type of issues here. In other words, trying to find out what's really out there is what this trade's trying to guess right now. This is Rich Nelson. Hope you have a good trading day and a good trading week.